Hey guys, James Crocker here with Crocker Realty. I'm going to give you a quick real estate market update for the month ending August 2024. I'm going to go over 4 statistics with you, and then I'm going to give you a quick summary of what that means for you in layman's terms. I'm going to try to keep this video under 5 minutes. The number of active listings in August was 14,265. The previous month, 14,808. Last August, 11,338. So we've got about 3,000 more active listings last month than we did the previous August, which isn't horrible. It's very close. The price was $714,947 for the average home sale in August. In July, it was $717,732, so very close. Last August, it was $698,949. So we've had about a 2.3% increase in home values between last August and this August, which is, if you own a $500,000 house, it's about 10 grand. So there's nothing wrong with that. The number of sales last month, 4,230. For July, it was 4,421. Last August, 4,561. Very close. Not a lot's changed in terms of the number of homes that are selling. Just a little bit more inventory. The months of inventory. Last month we had 3 months. July we had 3 months. Last August we were just under 3 months, about 2 3/4 of a month. So the market is very similar right now to what it was this time last year. However, mortgage rates are going to start dropping. They already have. The Fed has a meeting in about a week and a half. They're probably going to cut rates at that time. There is another meeting or two between now and the end of the year. It's possible that between now and the end of the year, we have a 0.5%, 0.75%, maybe even a 1% drop in mortgage rates. 1% is a little optimistic, but I think a 0.5% is very possible. So what does all of this mean for you? I want to be very clear about this. If you are looking to buy a house, you need to do it in November or December. Now is okay as well, but you're going to get a little bit of a lower price in November or December. Values in Denver, even when the market was red hot, between the end of July and the middle of November tend to drop, okay? And then they kind of hold steady until the first of the year, and then they start to shoot up after the first of the year. That's going to be more pronounced this year, and the reason for that is because mortgage rates are going to drop. And when mortgage rates drop, it's going to be a feeding frenzy. Watch. All of you guys that comment on my videos saying that the market's going to crash, you're wrong. And you'll see, 2 years from now, if you remember this video, it'll be like, James was right. People have been saying this for the last 10 years. Yes, the market is going to crash eventually, but it's not happening within the next 6 months. I can guarantee you that. It's probably not happening within the next several years. We're just going to have moderate appreciation for a while. It's not going to be 20% a year or 15% a year. We're probably going to have 5% appreciation per year for the next several years, which is fairly in line with historical averages. It's pretty close. So buy a house in November or December. Do not wait until after the first of the year. If you wait until after the first of the year, you are going to pay more. You're probably going to get the best deal on a house that you will see for a long time in either November or December of this year. So if you're going to buy a house, start looking at the beginning of November or the beginning of December, somewhere in that range. There are programs out there where you can get a house with very little money down, less than $10,000 down. I just got a single family residence for a client. The house is worth $430,000 approximately. It's a smaller house. It was really nice, well done. It was a flip. $4,500 down. Okay, so it's not expensive to buy a house in terms of your upfront cost. There are many programs out there that can help you with that if you qualify. If you want to know if you qualify, give me a call. If you're thinking about selling your house, if you need to just sell it and move to rent for a while or move out of state, you should probably wait until springtime because you're going to get more money for your house at that time. If you are thinking about upsizing or downsizing, again, you should probably wait until spring. Yes, you're going to pay more then, but you're also going to sell your current house for more, right? If you do it now, you're going to get a little less for your current house. You're going to pay a little less for the new house you're buying. But the difference is, in March, you're going to have a lower interest rate on your new mortgage, assuming that you have to get a new mortgage. If you were going to sell your house and pay cash for another house, which I would pretty much never recommend doing, by the way, now it's fine because the mortgage rate's not going to have any impact on what you're doing. You're going to pay a little less. You're going to sell for a little less. It's going to be a bit of a wash. If you're one of those people that owns a house where you have a 2.75% interest rate or really anything under 4%, I would not sell your house. Keep it, rent it out. If you have to move, rent it out unless you need the money from that home sale to buy your new house. Or if you have a ton of equity in your house. So if you have like $200,000 of equity in your house, and even if you have that low interest rate, you're better off selling it, using that money and investing it in something else versus keeping it locked up in your house. because the amount of cash flow you're going to generate and principal pay down, mortgage interest deduction, and all those things that you would with a rental property is probably not going to exceed the amount of money you would make investing that equity that you have elsewhere. If you only have like $50,000 to $100,000 of equity in your current house and you have one of those very low interest rates, then you might want to keep it a bit longer until you build some more equity. There's a threshold where you get a certain amount of equity, and it depends on what your house is worth. There's a lot of variables where it is best to sell it regardless of what your interest rate is, because you can invest that money for a higher yield somewhere else. In any case, I don't want to get off too out in the left field. I think you guys get my point. If you're looking to buy, do it before the end of the year. If you're looking to sell, wait until March, unless you're paying cash for your new home. If there's anything I can do for you guys, give me a call anytime. James Crocker, 720-235-7388. Hope you guys have a great night. Talk to you soon.